Lesson 14, the reversal or king's crown. Now we're going to have a lot of fun with this one, but by the end of this lesson, you will learn a technical trading pattern called the king's crown, which may become the reversal of a trend. You'll learn the ABCD slash 1, 2, 3, 4, 5 thought process while trading. The 5 steps of the formation of an uptrend crown and a downtrend crown. You'll learn how to identify the 5 different up and downtrend crowns and how to trade them. You'll learn how the natural Fibonacci formations affect the crown, how to recognize a crown pattern. This pattern indicates a potential reversal in the market, which may help you manage your personal financial portfolio if you trade other products, and potentially save yourself from financial loss as well as potential emotional devastation. I never cease to be amazed at how many people have X amount of dollars in retirement, they don't watch it, and all of a sudden it just slowly disappears. If they properly educate themselves about a crown, they may learn when it's time to bell and lock in some profit. Lastly, how to create a trading plan and trade that plan as you financially protect yourself in every trade. Now, what goes up must come down. I've never seen the market go to the moon, nor have I ever seen it fall to the depths or the center of the earth. Some traders call what I call the king's crown, and I'm the one that has named this the king's crown. But, years ago, when I was learning to trade, I, like you, was very desperate, trying to figure out information, help me understand, and I came across the term head and shoulders. It looks just like this. And as soon as I discovered how to trade the head and shoulders, which is a reversal pattern, boy, I became the busiest and tradingest fool in the world with the head and shoulders. Now, the head and shoulders is basically a pattern that says the market's no longer in an uptrend. We are no longer making lower or higher lows. We are now making lower lows. And as soon as you recognize that head, then draw the neckline and enter the market at the neckline. Well, that was great until I started to get really beat up. And let me help you explain, or let me help you understand how you can get really beat up. If this is A, and this is B, and this is C, pullback, if it pulls back to a 786, that means it's only going to go down to a 1.27. If it pulls back all the way to an 86%, that means it's only going to drop to a 1.118. Now, if you're supposed to short the market at the break of the neckline and it's retraced back to a 786 or 86% and only goes to the 1.18 or 1.27, that means the moment I get in, it could pull back to form a new A, B, C, D. And before I even knew the ABCDs or uncovered the ABCDs in the market or the 1, 2, 3, 4, 5, I was victim to shorting the market when the market would take me in right at the neckline, just like I was supposed to do, and very seldom will you see drops like this. But boy, I was the busiest trading fool entering that neckline, only to find out that sometimes it would hit that 1.27 extension and reverse and rally, of which I was getting beat up. Furthermore, many times the neckline break doesn't lend itself to equity management because your stop has to be so far away. Now, help me understand this about you. Would you rather enter at a neckline in this situation? Or would you rather enter right here? Or how about enter at this evening star? Which one is better? Well, I think it's better to enter right here at the back side of this trend line at the nude down A, B, backside of the trend line C, 618, potential test of that 618 evening star, so that if it doesn't work out, your risk is real small. And then let's look at risk versus reward. Would you rather risk 20 pips or 25 pips? Or would you rather risk 20, 40, plus 15, 65 pips? What would you rather risk? Well, I would venture to say that, well, gee, if I can have a payoff like this, what does it really matter? Well, would you rather capture in a move 20, 40, 60, 80, 100? Or would you rather capture from the evening star 20, 40, 60, 80, 100, 120, maybe 125? I think the answers are starting to become very obvious. And what I'm going to do is, in my journey of learning to become a good trader, I kept saying to myself, I've got to figure out a way to enter this darn market better than that Head and Shoulders. And that's when I discovered the King's Crown. Now, if you really look at this Head and Shoulders, it also looks like a crown. Left tip, center tip, right tip, fall. Do you see it? And when you apply the A, B, C, D's, trend line break, down A, B, C, D's, you can have a great potential trading opportunity on a reversal. Now, here's the process I want your minds to think. A, B, C, D, A, B, C, D. Let's look at it. A, B, C, D, A, B, C, D, A, B, C. There's that Gartley pullback. You know, remember the Gartley pullback? A, B, C, D. Past resistance becomes future support. A, B, C, D. Now, when the market gets tired of making up A, B, C, Ds, it's going to go through a 1, trend line break, 2, come to support, 3, find the left tip, 4, that should be somewhat equal to the right tip. Figure out your Fibonacci's and look for the potential backside of a trend line. 4, convergence, okay? 1, break trend line. 2, come to support. 3, find left tip. That gives you a heads up of where the right tip is going to go. Look to enter at that convergence. 4 and 5, draw the new downward trend line. After the market does its reversal, then your thought process needs to go down A, B, C, D's. You get it? And during this whole process, it looks like a crown. And there are what are called uptrend crowns, A, B, C, D's, which reverse and make down A, B, C, D's. And then there's downtrend crowns, where the market's making down A, B, C, D's, and reverses and starts to make up A, B, C, D's. If you look at this a little closer, look at how the market returns to support in an uptrend. And in a downtrend, look how the market returns to resistance. Either way, the market's going to wave. Let's look at this a little closer. In the 1, 2, 3, 4, 5 process, the market is in an uptrend, making A, B, C, Ds, A, B, C, Ds, higher highs and higher lows. In that process, the market breaks the uptrend line. That's step number one. Now, in step number one, the odds, because remember, as long as the market is north of the trend line, there's an 80% chance of a continued bullish run. But when the market breaks the trend line, the odds turn to 50-50. Now we're 50% potential bullish move and 50% bearish move. The uptrend channel could shift and we could keep going up, or it could come down to support. If it comes down to support, okay, then we could be in on a reversal. But here, the market appears to be in an uptrend, and as it pulled back, it created that engulfing bullish candle, and I would have traded this. I would have got in with a stop at this low, but when it returned and broke support, that's number one. See how the market returned and broke support? Now we're in the sell zone, and this is the outer trend line. And when the outer trend line is broken, the market has a tendency to have a major reversal. When the inner trend line is broken, the market has a tendency to go to the outer trend line. But when the outer trend line is broken, the market has a tendency to go to the long-term trend line. And in a 60-minute chart like this, you can almost rest assured that outer trend line is way down here. So we have a high percentage chance of incurring a reversal. So step one is the breaking of the trend line. Step two is where the market returns to support. Now, when the market returns to support, we are no longer making higher highs and higher lows. What we just did is we made a higher high, but a lower low, not a higher low, which is then a sign of a potential reversal. Now the odds change from 50-50 to 80% bearish and 20% bullish. And now we need to start thinking of down A, B, C, Ds. We no longer need to be thinking up A, B, C, Ds. So here the market returns to support. Now when it returns to support, let's look at the backside of that trend line. Remember, the angle of the trend line, when the backside of the trend line is lower than the recent high, that's a high probability chance we're going to fall. So step two is the market dips to support and begins to make lower lows, not higher lows. Step three, we then look at the left tip. Now the left tip is the B in the recent A, B, C, D climb. Why? Because the left tip is usually where the market will retrace to and form the crown and then fall. Let's look at it on a chart. Comes down to support. We go and we find the left tip, which means if I draw a straight line over here, this market will probably U-turn at around 29.60 and change. Okay? Now, that is a half a beat back up. Remember, we got to count our beats? And that will be where the projected new C is going to be. So, step four is prepare to enter at the back side of the trend line. Count your beats with a protective stop at A. Here's what it's going to look like on a chart. Step four is enter at 4C. See how the market rallied, goes to the back side of the trend line, somewhat equal to the left tip? and we need to prepare to sell at the back side of that trend line. And now we need to draw our Fibonacci tool from A to B to figure out if we can find a convergence. So let's draw that Fibonacci tool from A to B. And here we have, at the back side of the trend line, a convergence. It's a convergence of the completion of a half a beat at a 618 backside of a trend line. It's pretty good. That's pretty good. And after the market U-turns at the backside of that trend line, step 5 is to draw the new downtrend line. And the market should stay south of that new downtrend line, completing down A, B, C, D's. Just like you see it here. A, B, C, D. And of course, the market kind of went sideways here, tested that high there, created a beautiful evening star, and then just dropped like a rock. Put this on pause and really look at this. Put this on pause and study it. Because here's the up A, B, C, D, followed by the 1, breaks a trend line, 2, comes to support, 3, find left tip of the crown, 4, prepare to enter at 4C, which is backside of the trend line, figuring out your new A, B, C, D's, and 5, drawing the new downtrend line. Now put your machine on pause and really study this, because this is the completion of the crown. Put your machine on pause. And more importantly, repeat this over and over and over again until you get it. The market moves in A, B, C, D's, A, B, C, D's until it gets tired, and then it reverses through a 1, 2, 3, 4, 5 process. After it reverses, it looks like this. There's your crown. Do you see it? And your entry is way better than the Head and Shoulders. The value of learning the crown formation is upon the completion of the 1 through 5 steps, the center tip of the crown should be the high of the new downtrend. See, that A becomes the high of the new downtrend. A, B, C, D. A, B, C, D. A, B, C, D. Okay? The crown formation entry teaches you how to get in at a C, which is really the first wave of the new downtrend. Now, as I've said before, becoming a good chart reader requires spatial intelligence. What we're going to do is turn everything upside down, because in a downtrend, A, B, C, D, everything works the same way, but in the opposite direction. Let's take a closer look at this. Remember our little Head and Shoulders guy? Now all we got to do is turn this upside down. And in turning it upside down, there's the left shoulder, there's his head, and there's his right shoulder. And that wonderful book talks about getting in at the neckline. And this is what I was talking about earlier, where if you would have got in at the neckline, the market took you in, boy, and you thought this is great, until it U-turns, forms this evening star, which is a sign this puppy's going to fall, okay? Forms, and here's where my stop might have been, perhaps at the last low. I'm already stopped out. And if I put my stop at 8 because I know very little about equity management. I'm in a world of hurt as this market takes me in here and then drops 20, 40, almost 50 pips. Believe it or not, from this high to this low is 60 pips. One beat, a convergence. Now, would you rather get in at a 618, or would you have rather gotten in at this neckline? 618 engulfing bullish candle. Look at how the market moved your way from the beginning instead of taking you in here and suffering through all this pullback. That's how critical learning the crown is. Now let's dissect it. It's not that hard. It's just an 1, 2, 3, 4, 5 process. In a downtrend, the market's making down A, B, C, Ds. A, B, C, Ds until it gets tired of it. Once it gets tired of breaking or making down A, B, C, Ds, it will break the downtrend line. Now, when it breaks the downtrend line, your percentages of a continued down direction diminish. They go from 80% bearish, as long as the market is south of this trend line, we're 80% bearish. But as soon as we cross the trend line, we are now 50-50 bullish bearish. Why? Because there's still potential Fibonacci levels that the market can hit, U-turn, and then fall again. Now let's look at this downtrend. A, B, C, D, A, B, C, D, A, B, C, D. And now the market's in the down A, B boundary. This should be the C. If the bears maintain control right here at this downtrend line, we should get tweezer tops, evening star, engulfing bearish candle. This is going to have to be a huge engulfing bearish candle, but there should be some sort of a sign. What happens, though, is the market enters into the buy zone. The bulls have taken control. The odds now are 50-50. You can see that the market is stalling at the 86%. Lot of indecision. Look at how the market pulls back to the backside of the trend line, then rallies, tweezer tops, potential sign of a continued drop. Okay? Indecision. Step 1, market breaks the trend line. Step 2, market rallies to resistance. When it rallies to resistance, we are no longer making lower highs. We are now making higher highs. Look and see how we've made a higher high. Now the odds really are going to change. They're going to change to an 80% chance bullish direction now. Our mindset needs to go from down ABCDs to up ABCDs. A, B. We then would probably want to spread our Fibonacci's, figure out where the backside of the trend line is. This downtrend line was resistance. It's now going to act as a floor of support, and we are 80% bullish. So the third thing we do is go look for the left tip of the crown, which is the down AB, or the B, or left shoulder, left tip of the crown. We look at how deep that is because that's predominantly where the right tip's going to go. So I go look for the left tip. A, B, this is your left tip. This then would be your center tip. To anticipate a pullback to a right tip. And my thought process is, I'm going to want to get in at this right tip of the crown for a rally up to the new D. So I anticipate a fall. I want to enter at 4C. That's where I'm going to look for a Morningstar, tweezer bottom, engulfing bullish completion of a harmonic beat. And so if I wanted to, I could count 20, 40. Ooh, look at that. Completion of a beat around 60 pips away. So I want to spread my Fibonacci's, which is part of step 4 continued. Spread those Fibonacci's, and look at this. At the 786 completion of one beat, that's where my potential entry is going to go. So I sit and I wait till the market falls. Sure enough, look at that. Falls, creates an engulfing bullish candle, because that's what I want to do. I want to wait till it's a sign. Please, market, talk to me. Give me a sign. Look at this. Gave you a sign. Okay? Gives you a sign to get in. You get in, comes down, test that low again, and step 5 is to draw the new uptrend line. There it is in completion. Step 1, break the trend line. 2, go up to support. 3, find the left tip. 4, anticipate a right tip entry. 5, draw the new uptrend line so that you can profit take at your D exit. And this is what it looks like when the crown is complete. If you're having a hard time seeing this, because it does take spatial intelligence, do yourself a favor. Turn this upside down. Literally, turn it upside down and take a look at it. Take your computer and turn it upside down. You'll see the crown. Put your machine on pause. I know this looks really, really busy. Put your machine on pause and really study this. Let's go through this trading exercise. Can you visually see any crowns in these charts? You start over here and go A, B, C, D, A, B, C, D. Draw an inner trend line. See if you see any reversals. See if you see any crowns. Put your machine on pause and you figure out the crowns. Just like this is a down, A, B, C, D. See if you see any crowns. This is what you should have spotted. Here's a left tip, center tip, right tip, fall. Here's a left tip, upside down crown, center tip, rally back up to resistance, dip to the backside of the trend line, and rally. And this is on a 60-minute chart. Find crowns on this chart. Do you see any? Put your machine on pause. This is what you should see. Here is left tip, center tip. Now, here you had an outer downward trend line and an inner. See how the inner is on the outside of the outer. And what took place is the market rallied back up to resistance. We are no longer making lower highs. Pulls back to the backside. If this is your A and that's your B, well, look at this. Come on. This is your C. A, B, 618, engulfing bullish candle, rally. Look through this whole rally. It wasn't until right here the chart says, you know what, trader? I'm exhausted. I ain't going anymore. Here's an evening star. If you stay in, I'm going to take back all the profit that I gave to you in this move. Stupid is as stupid does, I guess. This evening star was the sign that said, it's time to get out. Now, can you find any crowns in this chart? Put your machine on pause. Let's see what you come up with. There you go. There's the outer downward trend line. Okay? Market was making lower lows and lower highs until it rallied up, made a higher high. See how this high is higher than that high? Pulls back to a deep, still goes on the other side of the trend line, pulls back to a deep left tip, U-turns with a nice Morningstar decision, indecision, 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 decision. There's your Morningstar. Then rallies up, gives you some more help with the tweezer bottoms right here, and keeps on rallying up. This is a daily chart showing you that they form on all time frames. Now, do you see any crowns here? This one's real easy to see. But are you starting to get the feel of this? Because this is what you need to do. You need to be able to look at a chart just like looking at an x-ray and spot it. Well, this is a no-brainer here. There's your crown. Left tip, center tip, right tip, fall. But there was another crown right here. Left tip, okay, center tip, right tip. Instead of falling, it continued to rally. Do you see it? This is a 10-minute GBP chart. Now, the market is constantly moving, breaking trend lines, and creating crowns as it changes directions. Think about it. You know, when the market starts to rally and increase its speed, once it hits its D extension, many times it'll break that inner downward trend line and go to the outer. It'll break the inner trend line predominantly through a crown process. 1, break the trend line. 2, come down to support. 3, rally the backside of the trend line. 4, we're going to enter at 4C, and then 5, draw a down trend line until it hits the outer, and then you're going to have an upside down crown. Let's look at it on the chart. Okay? Here, the market breaks the inner trend line. See how we are rallying? 1 comes down to support, or 1 breaks the trend line, 2 comes to support, 3 rallies back up to the backside of that trend line, and then falls until it comes across an upward trend line. And in this case, I would have had to have compressed this chart to really find out where the upward trend line is, but changed its directions through a left tip, center tip, right tip, rally. Okay? This could have been the left tip as well, but I'm counting this as A, B, C, D, A, B, C, D. Okay? Market rallies back up, takes out these highs, which makes this the left tip, pulls back equal to the left tip. See it right there? Left tip, right tip. Either way, pulls back, finds support at the backside of the trend line, and then begins to rally. Now, there are small uptrend crowns inside of big uptrend crowns. See how the market's rallying? See, this is what I'm talking about. It breaks that inner trend line. See how it broke it, came down to support, rallies up, and forms a right tip, then literally breaks the outer trend line, and a bigger crown is formed. Left tip, center tip, market falls, comes to support, and then rallies back up to the backside of that trend line. Gives you a nice evening star right there. And amongst all that commotion, evening star, tries to test it, and then a huge engulfing bearish candle appears. Put your machine on pause and really take a look at this. Just like there's small crowns inside of big crowns in an uptrend, there are small downtrend crowns inside of big downtrend crowns. Put your machine on pause and take a look at this one. The blue is the left tip, center tip, market rallies up to resistance, then falls and rallies back up to where? Left tip, center tip, takes out this high, pulls back to the back side of this downtrend line. Gives you a nice engulfing candle, and now starts to form up A, B, C, D. A, B, C. Look at this engulfing bullish. Through all this retracement, engulfing bullish, breaking counter downward trend lines. Hopefully, see how all this is starting to come together? Now, not all crowns are geometrical. We'd like them to be, but they come in all kinds of shapes. Whether they're geometric or they come in all kinds of weird shapes, they still must go through the 1, 2, 3, 4, 5 crown process. Now, this doesn't look very geometric or perfect, but it's still a crown. Why? Broke the trend line, 2 came to support, 3 rallied up to the backside of the trend line, and 4 fell. Put your machine on pause and look at this. The same applies in a downtrend. We'd like them to be perfect, but sometimes they're not. They still have to meet the criteria of the 1, 2, 3, 4, 5 crown process. Here we are in a downtrend. Market comes up to the trend line, rallies up, takes out resistance. That's the 1, 2, 3, 4, pulls back to the backside of the trend line, forms some beautiful tweezer bottoms. You know, you almost want to say, I love you, tweezer bottoms. And then from the tweezer bottoms, here's these 2 at first. There's another test of it. If you didn't catch it on time, there's those tweezer bottoms. And then the market takes off. Engulfing bullish candle right before it takes off. Now, we've discussed this over and over again. The angle of the backside of the uptrend line many times determines whether or not the crown's going to hold. If that angle is very steep, and if at this moment the market were to rally, can you see how you have no resistance, which means you have a high probability of a channel shift. This is better when if the market were to rally, the backside of that trend line is lower than the recent high. See, in this case, the market fell. Now, at this moment in time, if it would have rallied, see how if it would have rallied, the backside of that trend line is lower than that one. So 1, we broke the trend line. 2, came down to support. 3, let's find the left tip of the crown. Left tip, center tip. 4, that's close to where the market's going to go. 5, we draw the new downtrend line. You have a nice evening star there. If we shorted the evening star and did not profit take in this fall, when the market rallied and U-turned, it broke the new downtrend line, entered into the buy zone. Don't marry a trade. Once the market reverses, you've got to go with it. Enters into that buy zone. We're no longer making lower highs, A, B, C, D. We should have reversed right here at the backside of this trend line. Okay? Or on this side of the trend line, but we didn't. We broke it. We entered into the buy zone. Market pulls back, finds support at the backside of the trend line, and then takes off to the new up A, B, C, D, which means if we would have shorted this and didn't profit take, you may want to consider placing a stop reverse at the right tip of the crown, because usually if the right tip of the crown doesn't hold, the market usually goes the other way, and you're going to have a shifting of the uptrend channel. Don't forget that spatial intelligence. Turn it all upside down in a down trend. When the market breaks the downtrend line, always got to look at the angle of the downtrend, because if the market were to fall at this moment in time, is the backside of that trend line higher than the recent low or lower? Because if it is higher, you have a probability of a reversal. If it's lower, you have a high probability of a shifting of the downtrend channel. You want more of this scenario where it breaks, it comes up to resistance, and if it falls, it finds support, a floor of support, higher than the center tip low. Let's look at it here. Now, we were in a downtrend. Market begins to break the trend line, falls back in line, and finally breaks it. Here's your bullish candle on the north side of the trend line in the buy zone. Okay. Now, the market returns just shy of resistance. Not quite a crown, but it did take out these highs. Okay. But believe it or not, this is AB boundary. We're still in that AB boundary. AB. It looks like a crown. We never came up to that high. But if you thought it was, and it comes down and forms a right tip because you say, this is 1, this is 2, that's 3, I'm buying the right tip. Look at how if this fails at this moment in time, this market is not going to find a floor of support until it is lower than the most recent lows, which is a heads up that this market could continue to fall, which it does. Which means if you thought this was a crown, at the right tip of the crown, place a stop reverse. Why? Because if the right tip of the crown doesn't hold, you have a high probability chance of a reversal. Now, there are 5 uptrend crown formations and 5 downtrend crown formations. Let's take a close look at it. In a crown, after you get your crown formation, there's what's called a high left tip and then a high right tip. Let's look at it on a chart. 1 breaks the trend line, 2 comes to support. 3 fine left tip. Look at how the right tip, backside of the trend line, is equal. Market rallies up, forms a nice evening star right there, then engulfing bearish candle right before it takes off. You see, this is called crown number 1. Crown number 2 is where you have a low left tip and then a high right tip. Here is left tip, center tip, low, okay, break the trend line, come to support, left tip, market rallies to the backside of the trend line, finally gives you an evening star within all this indecision with the test of that decision, and then finally a real big decision. So crown number 2 is low left tip, high right tip. Crown number 3 is high left tip, low right tip. High left tip, right tip, breaks the trend line, okay, rallies back up to close to the backside of the trend line, and then falls. Go ahead and put your machine on pause and really take a good look at this. So crown number 3 is high left tip, low right tip. Crown number 4 is where you have 2 low tips, low left tip and low right tip. Here, we're in an uptrend, okay? Left tip, market rallies, engulfing bearish candle, breaks the trend line, comes down to support, rallies back up, hits backside of the trend line, goes sideways before it begins to fall. Crown number 4, low left tip, low right tip. Crown number 5, it can be either a high left tip or a low left tip with actually no right tip at all. Usually these crowns are fundamental announcement crowns. It's where the market has been trending in a direction, breaks the trend line, fundamental announcement, brings us to a straight drop, and you have no trading opportunity. Why? Because the market just falls. So crown number 5 is high or low left tip with no trading opportunity on a right tip unless you short the market when the market gets into the sell zone. Now let's look at this upside down. The downtrend crown is crown number 1, low left tip, low right tip. See it? Equal tips. Low left tip, center tip, equal right tip. Hits the backside of the trend line, engulfing bullish candle, rallies. Downtrend crown number 2, high left tip, low right tip. Here's what it looks like on a chart. High left tip, market breaks the trend line, comes to the backside. Now this was close. Look at the backside of this trend line. Boy, it was real close. Found support right at the backside of that trend line, which at this point in time, this is pretty steep down trend line, is still higher than the center tip low. Crown number 3, deep left tip or low left tip, high right tip. So left tip, okay, center tip, breaks the trend line, comes up to resistance, goes to the backside of the trend line, forms an engulfing bullish candle, and then takes off. A, B, C, D. Crown number 4, high left tip, high right tip. Looks like this. High left tip, center tip, breaks the trend line. After it breaks the trend line, 1, 2, comes up to resistance. 3, pulls back. Okay, past resistance becomes future support, equal to the left tip, and then begins to rally. And then crown number 5 can be a deep or low left tip, could be a high left tip with no right tip. It's a fundamental announcement day. Market enters into the buy zone, pulls back a little bit to the backside of the trend line, but predominantly takes off because you had this consolidation before the announcement. Announcement hits and this thing takes off. 10, 20, 30, 40, 50, 60, 70, and just keeps on going because a fundamental announcement took it there. Now here's the trading rules for trading a crown. And there are 5 different uptrend crowns and 5 different downtrend crowns. The rules are predominantly the same on all the crowns. Your success at trading a crown reversal will be solely dependent on how much you understand about the potential future wave movement of the 2 potential entries of the 5 crowns. So let's take a look at them. Once again, trading the crowns requires spatial intelligence. It's that visible skill of being able to detect an uptrend crown versus a downtrend crown. Now let's dissect this and cut it in half. You have an up A, B, C, D, and a down A, B, C, D. Just like in a downtrend, you start off with your down A, B, C, D, and then it reverses and creates an up A, B, C, D. Can you see it? A, up A, B, C, D, followed by a down A, B, C, D, where the market comes down to support. In a downtrend crown, market comes up to resistance. You're no longer making lower highs. You're making higher highs. And that's where we get involved with the Fibonacci's, because after it makes these ABs, we want to spread our Fibonacci's from the AB to determine where the potential C bounce is going to be so that we can take advantage of the D extension for profit. Just like in a downtrend. Once it reverses from an uptrend, let's look at the down AB. Spread your Fibonacci's from the down AB. Find out where the market's been, because from where it's been, that's where it's going to go. So, in an uptrend, once it breaks that trend line, comes to support, let's look to sell the backside of that trend line at a Fibonacci number with a stop at A, and if the stop is too far away, let's enter at a candlestick formation in a downtrend. Once the market does the 1-2, let's look to enter at the back side of the trend line after we spread our Fibonacci's from the A to B with a protective stop at A, back side of the trend line, and then let's figure out the D extension for profit taking. Don't make this difficult. Make it easy, okay? Because this is how the market works. I've been showing you, you've got to believe this is how the market works. I mean, let's just look at this chart. I've focused in over here, but let's look at here. A, B, C, D, A, B, C, D, okay? If this is A, B, C, look at how the market makes a lower low. Then we're making lower lows and lower highs until A, B, C, D. Draw a trend line right there. If I drew a trend line right there, what did the market do? Okay, look at this. I'm going to put in a trend line here for you. A, B, C, D. Market rallies up 1, breaks the trend line. 2 comes up to resistance. 3 comes to the back side of the trend line, forms some tweezer bottoms right at the back side of that trend line, and then rallies. Look at this. These are 20 pip increments. 20, 40, 60, 80, 100, 120 pips. Oh my word, that's 120 bips, 2 complete beats until, look at this, it pulls back to the trend line, 20, 40, 60 pips to the trend line, 1 beat back down, and then it rallies. 20, 40, 60, 75, 1 1/4 beats. Then goes through the crown process of 1 1/4 beats back down with a 1/2 beat back up, and that's where the right tip is, and that's where we should be selling for the fall. Now, in a downtrend, use that Fibonacci tool so that you can A, B, figure out your Fibonacci's. Where's it going to be? How many pips from this high to this low? Let's look for those convergences. Okay? Step 4, use that Fibonacci tool. Draw your Fibonacci lines. Anticipate the bounce at the backside of that trend line. So, here's the rules to trading a crown. When you turn on your chart, find and draw your trend lines, in or out or long term. This will help you determine if you're in an uptrend, downtrend, or if a trend line has been broken, signifying the potential end of a trend. Find the trend line break. See if the market has returned to C, support, in an uptrend, or C, resistance in a downtrend. Okay? Remember, if an inner trend line is broken, it may only go to the outer trend line and create a small move. Find the potential C movement, steps 1 through 5. If steps 1 and 2 are achieved, start setting up your trade for a crown reversal of the 1 through 5. Now, there's really only 2 entries. When it A, pulls back to a 618, 786 backside of the trend line, or B, if it bounces off of the 382 Fibonacci, potentially backside of the trend line, U-turns, takes out that high, you can buy that high. If you don't remember that, go back and listen to the lessons on Fibonacci. Now, after the completion of the 1-2, I want you to visualize steps 3 through 5. The fact is, you don't know whether it will be a high right tip or a low right tip, or if the crown will even work. It may be a shifting of the channel. The reason you always want to find the height or depth of the low of the left tip, which is step 3, is usually the right tip equals that distance as well. You really don't know whether the right tip will be the high or the low, or even if it will form. But the back side of the trend line will act as support or resistance, depending on whether you're in an uptrend or a downtrend. All you know is the market is potentially reversing and a trading opportunity is forming. You are looking for a trade on the reversal that offers the least amount of risk, just in case the trade does not work out. Now, there are 2 entries once again on all 5 crowns, and all you need to do is follow the rules. So let's trade a crown. Fill out that paperwork. Fill out, depending on which way, go find those 4 levels of resistance, 4 levels of support. Go ahead and circle the crown. Look for your entry. Have your stops in place, your limits in place. Figure out your ABCDs depending on the direction it's going. Buy into your trader's mantra. Don't get excited with this. Don't go do that head and shoulder stuff like I used to do. Just buy into the fact that the market will meet the criteria of my trade or I won't trade. So now here we're in an uptrend. Let's just say we buy this engulfing bullish candle. All of a sudden, we have a stop at the low here. The market stops us out. It's not the end of the world. We're not going to go throw a pity party. But we have now entered into step 1. My mindset needs to start thinking, 50-50. If it comes down to support, I need to start thinking 80-20. And sure enough, comes down to support. Now I need to go find left tip and look for the backside of the trend line. Left tip is around 29.60, a little higher. I need to spread my Fibonacci's from A to B and start to see if I can find a convergence, harmonic beats, etc. Either way, I need to look to enter when the market rallies, just like now, equal to the left tip, to short the market, spread my Fibonacci's, count my beats from here to here, 20, 40, 60 pips, completion of a beat, backside of trend line at the 618. See how easy this is getting? Now I need to envision my levels of support, support 1, 2, 3, 4. I need to envision how the market's going to wave, come down, take out first level of support. I'm now going to start to form down A, B, C, D's. Look at how it hits the 1.27, scores a point. A, B, C, D, comes all the way down. From this one, I'd spread my Fibonacci's again, come down to support, and take out support level 2. It's a game. This is a game. Always look at your risk reward. Is the risk worth the reward? Well, look at this case, sure it is. Okay? And look at what the market does. Falls like a brick out of the sky. Bears come down, score 1, 2, 3, 4 points. Now that it's taken off, draw my new downtrend line, which is step number 5. There's your crown. Don't make this hard. It's not meant to be hard. This is supposed to be real easy. Keep it easy. Keep it simple. Figure out your paperwork. Put it in your logbook so that you can go back and refer to it. Now, did this lesson teach you a technical trading pattern called the King's Crown, which may become the reversal of a trend, which is commonly known in the marketplace as head and shoulders? I just think the King Crown is better. Thank you, FX Chief. The ABCD, 1, 2, 3, 4, 5 thought process while trading, please don't forget that. The 5 steps of the formation of an uptrend crown and a downtrend crown. Did this lesson teach you how to identify the 5 different up and downtrend crowns and how to trade them, and how to apply the natural Fibonacci formation of the crown so that you can get in at the first wave? Did it teach you how to recognize that crown pattern? This pattern indicates a potential reversal in the market, which will help you manage your personal financial portfolio. If you trade other products in the market, these crowns work on Microsoft stock, they work on GM stock, they work on corn and wheat, they work on gas and gold. This just isn't for the Forex. And I know I taught you how to create a trading plan, and all you got to do is create that trading plan before you trade, pull out that trader's checklist, and trade that plan. On behalf of everybody here at Market Traders Worldwide, and I am proud of the fact that we are worldwide, I'd like to say thank you for taking the time to learn about how the market reverses through a crown process. This is FX Chief.